Welcome back, everybody. Hope everybody's doing well. Let's get right into it. Gabe Velazquez here with you, transparenttrading-solutions.com. We have a big day tomorrow, right? We got CPI numbers. Go ahead and type in the chat, please, if you can hear me and see my image here, as usual. Everybody, please bring out your charts. Dennis, how you doing? Everybody, please bring out your charts. Let's go through these charts together. In fact, not a lot happening since we were together on Friday in regards to, let's get into the S&P real quick. Again, just back and forth, still contained within our 4,100, 4,200 level. That really hasn't changed. There's been a lot of play in between there. Possibly tomorrow, with the number tomorrow, with the big inflation number coming out, we may have some breakouts. Finally, literally, we've been in this range almost 2 weeks now, right? And so maybe around maybe tomorrow. And by the way, just a quick reminder. By the way, give me a like and whatever. I know there's we got I get over 150 views on this thing. So if you come in later in the next couple of days or whatever, please go ahead and leave a comment, subscribe to the channel, give me a thumbs up and all that good stuff. Okay. All right. Also, I have another class coming up in a week from this Thursday, and I'm gonna actually I'll talk about this at the end of the day. Let's continue. So not a lot really. One level that I did give you guys, I think it was Friday on the S&P. I'm sorry, on the Nasdaq. Yeah, Dennis. My point was that the number in and of itself is totally irrelevant, correct? So whether it comes in at 9.3 or 8.4 or whatever it is, the reaction by the markets, in fact, is way more important, right? And we will have volatility really across all markets, the S&P, all the equity products, bonds for sure. Friday we had a huge bond drop, as you guys saw. We had a big bond, bonds sold off pretty sharply, but then kind of came back. The brunt of the move, really, the extent of the move on Friday's hotter than expected jobs number actually came from the bond market. So I would expect that the bond market's going to have some nice movement. In fact, to that end, we're coming in. I think I mentioned we were long the yen. We're out of that because of but we're out of that break even. Just again, if you guys are, we're out of that break even, and we did put on a new TLT volatility option play, right? So we're coming in tomorrow expecting huge volatility in the bond market, and we're doing that via options and using the TLT, right? So, and I'll I've been kind of showing you guys what some of the things that we've been doing in here. So we'll see how that. I do expect bonds to really have a possibly another breakout move to the upside or to the downside. Doesn't matter. That the whole beauty about the options, if you understand how to do them, is in this situation it's actually a volatility expansion play. So it's not a directional play. We don't care what direction it goes as long as the volatility expands. That's really how you get paid on those options. Okay. All right. So NASDAQ, I did mention a level. I don't know if I did mention a level on the NASDAQ, 400 last time I was here. I don't know if some of you guys were able to take advantage of that. And that was pretty clear cut on the charts. And that's why I urge everybody to look at your charts when I'm giving you some levels. the way we come in this afternoon is obviously we had a bunch of I think it was Micron. Yesterday it was Nvidia. Today was Micron. So all a lot of the semi stocks are warning right now, and that's pushing the S&P. I'm sorry, well, both the S&P and the more acutely the Nasdaq, for obvious reason. It's heavily tech weighted and so forth. So we are bouncing off of the 12,250 area. If you look at your 30-minute chart, there's a nice little level there. So that is getting a little bit of a bounce, but clearly everything could change tomorrow. We could just blow right through the bottom end of this range as well tomorrow. So if you're not comfortable with the volatility coming in tomorrow, then obviously you should sit this out. There's a big old cluster of a day accumulate, like a daily accumulation in the Nasdaq, roughly around this area we're in right now, right around the let's call it 12,900. Let's call it 12,900 to 12,850 ish, right? So it's going to be interesting to see if we actually hold that level tomorrow. Maybe we go deep into that and then actually hold that level. So if you look at your charts, you can actually see that very clearly as a kind of big daily accumulation level. And this is going to be interesting because as I've been writing with my newsletter. By the way, if you haven't subscribed to the newsletter, go ahead. There's a link. There's a few links below, which I'll cover at the end of the presentation here, of my session here. But yeah, so here's why that's important, right? It's important in several respects. First, the debate again rages on whether this is it's going to be just another failed rally in a bear market situation, or we start, if we rally from here and take out particularly in the S&P, everybody's looking at 4,200, which is the June highs. That would make a higher high. So, we're still debating that. It's been 2 weeks. Market can't get any traction. So I think, and by the way, can we still be stuck in this range tomorrow? Of course. I mean, I thought the jobs number could break us out, but nothing doing there. So we'll have to see. So from a trading perspective, again, I'm not. So if you think I'm, one of the things I'm going to talk about in my next session here on not this Thursday, but the following Thursday, is getting an edge. And one of the things that I get quite often is, why don't you talk about like moving averages and the conventional stuff? Well, that's not the edge. Everybody looks at that stuff. So I'm just looking at more or less. For me, this whole notion of, is it a bear market rally or is it this and that, whatever, doesn't matter. Buying low and selling high. If you're still stuck in this whole notion that it's a bear market, you actually missed a 20% move from the bottom in the Nasdaq, correct? Right. In other words, if you clung on to that whole, it's a bear market, it's in a major move down and so forth, that mindset would have in fact prevented you from going long near the bottom, which was, by the way, if you go back to my newsletters about a month ago, that's actually a weekly accumulation. You understand? Does that make sense, everybody? So you can't you can't hang on to your conventional thought process, because that's never going to get you an edge. And in the long term, you may do okay with that. But one of the things that I really talk about quite a bit is changing and not thinking like a retail trader, which is basically what everybody does, looking at the conventional patterns and so forth. Okay. All right. So with that, the way I'm framing the S&P and the Nasdaq right now is still in a range, correct? And so why do I frame it that way rather than every other way is because if it's going to stay in a range, that means that you could, on the lower end of the range, be long, trade it up to the top of the range. And then when it finally breaks out, you know, then you may have an opportunity to buy the next pullback when it breaks out. But there's 100, in the Nasdaq, there's guys, there's 400 or 500 points of leeway going short and long, both sides. Does that make sense, everybody? So that's the way buying low and selling high works. Again, rather than hanging on to some conventional thought process that says, the market's, I shouldn't be buying it because it's a bear market, or I shouldn't be selling it because it's a bull market, that type of thing. Okay. All right. So that kind of sums up, so in a nutshell, 4,100, 4,200 tomorrow, perhaps we break out of these ranges. NASDAQ is going to be sitting right at that 12,930. And then, all the way down to about 12,850 or so. It's kind of an ugly accumulation. And last thing before we go is, again, regardless of what the number is tomorrow, everybody's expecting a hot number, right? Whether it's 9.1, 9.2, whatever, anything in a 9 handle, the initial reaction is probably going to be down. But just like I talked to you guys on Friday, and I talked to my members on Friday, if we have the initial knee-jerk down, that doesn't matter, because what happened on Friday, if you recall, we had the down move, and then we actually rallied back up to the top of the range, and now we're back down to the top of the range. So that there goes the range trading thing again. So watch out tomorrow. The initial knee-jerk, if it's down, if it reverses by the end of the day, that again is going to be a tell whether this market is still going to be resilient. If, however, we fall off the cliff here and then just keep going down and close at the lows of the day tomorrow, that's obviously that would confirm the move down. But so it's going to be really interesting. Okay. Any questions on that before I move on? Okay. All right. Now, again, the dollar, we've been talking about the dollar. So the dollar will be impacted as well. The dollar has been kind of range trading back and forth, really also stuck in a range. If you look at your dollar index chart on a daily basis here, you can see that also the dollar index is large, by and large, been all over the place, which has been roughly about 107 down to about 105.5. Very, very choppy, very rangy. That's